Welcome back, friends, to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis, and whatever else I can come up with to use. I'm DXMC. Today, we'll look at the Bitcoin price chart. We'll also take a look at some of the Western markets and see what we think is going on over there. We'll also take time to unpack some of the supply dynamics and activity happening on-chain, and how its profile is different from this point in markets in the past. So stay tuned for that. If you enjoy this content, make sure to give my video a thumbs up, subscribe to my channel, and share it with your friends. Your support will help us to grow and help me to continue making great content. I appreciate all of your support. Many of you have been with me since September, and we're just getting started. You know, when we look at the price chart here, there's not a lot going on. It's very boring and sideways. You know, we mark the top and the bottom of the range for the last year. And if we look at some of these other key levels, like this level here, which was September 7th, this was the day that El Salvador made Bitcoin legal tender. Then if we look at the bottom of this day here, which was really the end of the Evergrande FUD, when China's real estate debt problems were really coming to light, these two levels have actually marked the boundary of price since the December 4th liquidation. And if we take this 39,600 level back even further, this level right here, it's pretty much in alignment with the top and the bottom pivots that opened 2021. This was in January of 2021. It marked the first real top after we broke the previous all-time high. We ripped up to 41,000 and then we had a pullback. And as we've talked about on this channel, this moment for the market here was really where on-chain exuberance reached its zenith. This was where the majority of spending occurred by old hands. This was where a bunch of whales sold. This was where a bunch of miners sold. And this was where long-term holders were at the peak of their distribution. So this part here was a big moment for the market. And the top and bottom of this pivot here essentially established the lows from June and July. So if we are not able to hold this 39,600 wick that we saw from the bottom of the Evergrande FUD, that also caught the bottom recently when we saw buy support under 40K, the loss of this level, by my estimation, would then put us down into this kind of price action down here. That's kind of what I'm looking at right now from the price chart. And there's some other things going on in the macro picture that will play a role as well. Something else I've been paying close attention to are the S&P 500 and the Dow Jones Industrial Average, and where they are in relation to key moving averages. So the S&P 500 right now is testing its 100-day moving average. And in the money printer era, in the last couple of years, this moving average has been a key support. And the S&P has not spent considerable time below its 100-day moving average since May of 2020. Likewise of importance, the Dow Jones finds itself testing its 200-day moving average, which, like the 100-day for the S&P, has been key support in the money printer era. The Dow Jones has not spent considerable time below its 200-day moving average since June and July of 2020. So right now, the major indexes for Western markets are testing a key support level. And either it means we get temporary relief from the bloodshed in the short term, or the outlook for the next couple of months becomes a lot more bleak, because these major indexes do not enjoy corrections below major support. They tend to get ugly as a lot of players react to those levels. There's a lot of automatic hedging that occurs when certain moving averages get broken. So it's something to look out for. Capital will rotate if we see these levels broken for anything more than a few hours. Interestingly, if we look at Bitcoin here in this bold white line against the three major indexes, so we've got the Dow Jones in blue, the S&P in red, and this green line is the NASDAQ. The three of these indexes have really been declining heavily since the end of December, while Bitcoin it's lost some ground. Really, most of its bloodshed was earlier in December and in November. So it's kind of curious to see these major indexes they had a bit of a rally while Bitcoin was still recovering from the liquidation. But they've now since seen weakness, and it seems like maybe they're catching up to the weakness already shown by Bitcoin. As Bitcoin is the premier risk asset, it seems to be a bit of a fire alarm for weakness in markets. It tends to roll over in tune with or before other assets. So I find this dynamic a bit interesting. But as we spoke about, this level here of 39,600 remains important. And so as long as we are able to continue finding support here, I think ranging sideways is the best that we can hope for until the macro situation starts to loosen up a bit. Because there's a lot of fear in this market right now. And that fear is alongside expectations that the Fed could raise rates 3 or 4 times in 2022, which has the markets reeling a bit. This tweet from Liz Ann Saunders is showing the number of rate hikes the market is pricing in over time. If we look back here to October and November, when Bitcoin was in the middle of its all-time high breakout, the number of rate hikes expected for the coming year were only 2, and that has now more than doubled to over 4 rate hikes priced in by the markets. So I think that there's a lot of caution, there's a lot of money on the sidelines, waiting to see how the next month or 2 plays out. Because if the Fed continues to taper their asset purchases on schedule, they're expected to finish sometime around March. And then many people assume the first of possibly several rate hikes will come shortly after that, possibly as soon as April. So a lot of this is playing into what's going on with markets right now, in addition to the threatening of these moving averages by the major indexes. So there's just a lot of sauce in the pot right now, and it's important to be cautious and to make sure that we're assessing the entirety of the market, as Bitcoin and Western indexes seem to be closely related these days. There's a lot of risk-on parallels between the way Bitcoin is treated and the way growth stocks have been treated for the last year. But that's why I am keen to pay attention to what's going on in the Western markets. This chart here of network activity is showing 2 values side by side, and they are closely related. The blue value is active entities. Those are individual participants on chain that may own 1 or more addresses. The orange line is the number of transactions performed by those entities. As we've discussed on this channel, the absolute height of activity and interest for Bitcoin for the past year was in January of 2021. It was when we finally broke over the previous all-time high, around 19,500, and ripped up to 40K. If you see here on the chart, this is where active entities peaked and began to recede. It's also where transaction counts peaked from their multi-year levels and began to recede. We had 2 or 3 more months of interesting price action, but you can see the market kind of bowing over here and losing momentum. And largely that is due to the precipitous fall in on-chain activity. There were still people trading and buying and selling each day, but the volume and scale of activity was a mere fraction of what it was in January. In the months following, activity on-chain has come nowhere near the same levels that it was in the bull run of late 2020 and early 2021. It's come nowhere close. In the months following, activity on chain has come nowhere close to the heights that it was at in the bull run of late 2020 and into 2021. The levels of activity on chain here have not been seen since, not even in the rally back to all-time highs in October and November of this past year. We did see rising activity, increasing amounts of entities each day, increasing amount of transactions. But the highs of the recent values are on par with the middle of the market from 2020, when activity was picking up a bit from the liquidity crash in March, but was still very low compared to where it ended up being in the height of the bull run. So we've got price appreciation over a few months in the second half of 2022 that occurred without significant activity on chain. And we've unpacked this dynamic in a number of ways on this channel. Just how quiet the chain has been, just how little retail demand actually existed for Bitcoin after May. Yet we were still able to see price rally from 29,000 all the way up to 69,000. And the reason I believe it did not sustain that rally is because of this, because retail isn't here. And there's always some amount of spending that occurs at the top by investors that held through pain, that held through lower prices, that are looking to either break even from their previous entry or pay themselves for taking on risk and waiting. That kind of spending was guaranteed to happen when we got back to the all-time highs. In some amount, we did see that spending. It was less than we expected, but just that amount was able to kill the rally. This is a chart of new entities. So in the previous chart here, we were looking at active entities. Some entities that are active can be new, some are previously existing. This counts purely new entities. Get my drawing tools on here. Okay, so we're looking at new entities on chain with a 30-day exponential moving average. So by putting a moving average on, it takes away some of the noise and we can see the long-term trend. And when you look at new entities, there's kind of a baseline level of growth that even when we're not in a bull market, the level kind of falls back to. And then when we see interest rising, when the market is really taking shape and prices are rising and more people are showing up, we see these sudden and dramatic rises. We saw it here in 2017, and then we saw it in 2020. Strong rises in the number of new entities. And then after the bull run is over, activity tends to fall dramatically, and it falls back down to a baseline level similar to where it was before, because there's always a baseline year-over-year growth in adoption and activity for Bitcoin. It hasn't reversed in 13 years. But what I find interesting, take off all this drawing here, is that we had our run-up of entities in 2020 and early 2021. We had the fall off, just like we did here in 2017 and 18. And in the months since, activity has been quiet. We've fallen back down to our little baseline bear market growth channel. And yes, there was an increase of entities as we created the new all-time high, which just barely broke the previous all-time high. But if you notice, the scale of it is very small, and we've already come back down into this, what I'm calling kind of a bear market channel, baseline year-over-year adoption. Now, why does this matter? Well, it matters because this is the first time in the history of Bitcoin that we've created a new all-time high after a period of consolidation and not seen a new high in the amount of entities counted on chain. So if we look back at all the previous bull markets, all of them set a new high in the number of new entities on chain. All of them did. And all of the subsequent bear markets saw a recession in the amount of new entities before resuming growth again. And that growth has been on a relatively consistent channel, minus these bursts during bull markets. But here we are in the second half of 2021, having made a new all-time high, and the number of new entities is very diminished. It's very reduced. So what that says to me is that we are still very much in bear market conditions. Now, when people hear bear market, it makes them feel nervous, makes them uncomfortable because they assume that means things will get worse from here. But what really starts the bear market is the dumping of supply. That's the scary part. That's where everyone is selling out and panicking. Those moments are pretty short-lived, and it occurred in May back here. There was also it to a small degree at the top in November. So what we're in now feels like a protracted period of accumulation. And from what I can observe, the data points that I use to assess these things, it feels like the most rational explanation for why we were able to create an all-time high in what I'm calling bear market conditions is because of a lack of sell pressure. Simply because people didn't want to spend their Bitcoin in mass. The spending of Bitcoin is what helped to turn the market over in May. It's what caused the market to fall over in 2017. It's what put this top in here in 2019. More sellers than buyers. But the interesting thing about this recent market is that most of the selling was done back here. And then it took us several months to accumulate the supply that was dumped there by strong hands, by illiquid types, by long-term holders buying up the Bitcoin all through this period. As we have been reporting on this channel at length, long-term holders growing their stacks, illiquid types growing their stacks, all of the HODLer classes increasing their holdings that were dumped from May. And it takes time to absorb those things. And right now, we are still very much in a quiet bear market type of climate. There is no retail demand right now. There is not an outsized desire to acquire spot Bitcoin by casual investors. The people who are in this market right now are the HODLers, the traders, and now some of these institutional types that we've adopted in the last couple of years. Those folks are always here. But the people who create these massive peaks in activity, who create these violent runs in price that are sustained for months at a time, That activity is nowhere to be found. And it could be some more time before it comes back based on some of the other macro factors we've been talking about. So this is kind of where my head is right now. It seems that we are in a bear market in terms of activity, in terms of on-chain activity, economic settlement occurring on the base layer. All of those things are very reduced. And it makes sense considering that we're squarely in the middle of this range here, as we talked about on the price chart. So barring an external catalyst, the risk and reward from this point to the bottom and the top of the range is about break even. So it's not likely that we would see a sudden burst of activity in one direction or the other. These things can take time, and they're often kicked off by some kind of an external catalyst. This is the realized HODL ratio, and it's been a couple of months since I showed this on the channel. This is a ratio between coins that are 1 day to 1 week old and coins that are 1 year to 2 years old. And it's an oscillator that is meant to show the momentum in Bitcoin between younger and older hands. As the market rages and coins are spent in higher and higher volumes from older hands to newer buyers, the ratio tilts towards the young side of this RHODL ratio, and we see the value rise up into these pink peak areas. When spending reduces, when hodling takes over and coin maturation becomes the dominant behavior, young coins mature. The size of the supply that they own reduces, and older coins, particularly those 1 year to 2 years old, begin to grow their supply as maturation causes coins to graduate into that group. Now, what we've talked about on this channel before was kind of the uniqueness of this current market. And one thing I think is pretty clear to people who've been looking at Bitcoin and looking at the data the way we are, is that the current market, the past couple of years, have been different for Bitcoin. And it seems that some metrics that we used to use to assess tops and bottoms may need to be rethought or looked at a bit differently than they were in the past. And this could be one of them. So if you'll notice, this metric got nowhere near what it considers to be a peak value in January and February. And that signifies that the amount of spending that occurred to create a swelling in the younger band cohort, the 1 day to 1 week group, that amount of spending was not enough to imbalance the amount of older coins that still existed and cause this value to spike. So we never got a reading from this metric that the market was overheated. Curiously, the peak value reached here in February almost perfectly aligns with the peak value reached in the first of the double pump bull market in 2013. We've reached almost to the same proportion of old coins to young coins, and we've now gone sideways and pulled back. And even the second half rally in the second half of the year reached up to almost the same place. It wasn't able to push higher, which again shows that the amount of spending was not up to par to where it has been in past cycles, the scale of it. We're now seeing this ratio declining heavily, and there's a mechanical reason for why this is. And I think that it's going to influence our expectations for what cycles look like going forward. Because from my perspective, this has been one of the more reliable ways to try to measure where Bitcoin is in its cycle. But as we've discussed, cycles themselves will continue evolving, and little tidy 4-year cycles are probably dead at this point. So what we really have to start looking at is the dynamic of the hodlers themselves and the supply balance between profit and loss, young and old coins. And what we're seeing from this ratio falling here is a rise in older coins. This chart is showing you the two members that make up this ratio. The red values at the bottom are the 1 day to 1 week coins, and these yellow values in the back are the 1 year to 2 year coins. And you can see that 1 year to 2 year coins, they swell in bear markets in accumulation. This is when coin maturation is really what's going on for most of the supply because spending is not occurring. And when a coin is not being spent, its natural state is one of maturity. If it isn't moving, it's aging. We get swells in this band when it takes a year or two after a bear market and we see all those coins that were held graduate across the threshold. We saw the same thing over here in 2019, a swelling of 1 year to 2 year coins. Well, if you look down here, 1 year to 2 year is pretty small. It's nowhere near the swelling here, but we're seeing a dramatic fall in the actual ratio. Part of this is because the 1 day to 1 week group, the red group at the bottom, didn't quite grow to the size that it has in the previous markets. Look how much spending we've seen out of this group. Much smaller amount of spending in proportion to the supply. So this is proportional to the amount of supply spent and its dollar weighting in the realized cap. And I believe that what we will see is that this metric will continue declining, and it might even come all the way back down. Now, why do I say that? Well, we look at these two groups, right? The ratio is between these two groups. Well, the group that is the denominator, the one that would cause the metric to fall, is the older group. And for it to grow means coins need to be maturing from 1 month to 3 months, then 3 months to 6 months, 6 months to a year, and then suddenly it's a member of this 1 year to 2 year group, right? Okay. I'm going to turn off the two metrics that make up the RHODL ratio and just show you the 6 to 12 month coins currently sitting and maturing. Look at this swelling of supply right here. Now, if we go back in time and we look at other points where there was a swelling of 6 to 12 month coins, it came just before a swelling of 1 year to 2 year coins. Now, I know that these two shades of yellow can be difficult to see when they're the only things on the screen. So I'll turn off the 6 to 12 once more and you'll just see 1 to 2 year, right? So this is the denominator of this ratio that we use to judge where we are in market cycles, right? When older coin size is growing, this value gets pulled down. Well, we've got the 1 to 2 year bracket here, and look, it's starting to spike up. If I zoom in over here, you can see it's starting to pick up and grow into January, right? That's because these coins, remember this is a 1 to 2 year bracket, these are coins that were held from back here. They're from early January 2021. They were held from this moment. And if we look at the group just below this one, 6 to 12 months, look at how much supply, 35% of the realized cap supply, is currently sitting in the 6 to 12 month group about to graduate into 1 to 2 year. And we will see a swelling, a huge swelling of the 1 to 2 year group. And that is going to pull this metric down. There are a lot of people that look at this ratio and they say the bull market is going to continue because we didn't top out on the RHODL ratio. Now, I'm not so quick to make that connection. It's not as easy to me as saying we're seeing growth in older coins, and because we got a double pump back here when this value hit this level, that means we're going to get another double pump. That's not what this means. Remember, as we discussed last time, on-chain data is providing you the supply side of the equation. It is not providing you demand data. Demand is what causes bull runs. It's what causes parabolic price action, is when demand overpowers supply. What we can observe from this metric and the data we're looking at is that the supply side is being positioned very well for demand to increase and to see a bull run. We're seeing supply maturing at a high rate, at a very high clip. So much so that we're seeing the metric that's supposed to say we're in the middle of a cycle reverting all the way back down and breaking the long-term trend. So when we see something like this, and we combine what we were just looking at with the fact that illiquid supply is also growing throughout this price weakness, and we're not seeing spending, we're not seeing liquid and highly liquid supply gaining ground, which would signify that people with more history of spending are interacting on chain, are adopting supply. We're seeing it end up in the hands of owners without a spending history, or at least a minimal one. What causes dramatic downward moves is the dumping of supply. But we're seeing the opposite dynamic. We're seeing supply holding up extremely well here at around 40,000. And considering how well it held up around 30,000 in May, June, and July of last year, seeing us now gathering support around 40K with illiquid supply continuing to grow, and now seeing this 6 to 12 month band of supply here, this massive chunk of supply about to graduate into the 1 to 2 year group. This is a lot of Bitcoin that was purchased back here and was held through an absolute roller coaster year of FUD for Bitcoin. Just think of everything people that bought in January 2021 have held through. Many of you listening to me right now are probably members of this group. You have Bitcoin from January or possibly earlier, and you chose to hold it through all of this. You held it through finding out Tesla had Bitcoin on its balance sheet, through Coinbase's direct listing, which marked the all-time high for 6 months. You held through Elon saying, oh, just kidding, Tesla doesn't want your Bitcoin for payment. You held it through China's industrial mining ban. You held it through all kinds of energy FUD. You held through 2.5 months of testing 30K as support and finally capitulating around the B-word conference. You held through a major crash on the day El Salvador made Bitcoin legal tender. You held through an Evergrande crash when China's debt crisis finally became public knowledge. And you held through an utter failure of the next all-time high break to sustain any momentum, which ultimately led to a scary liquidation event on December 4th. All of this was weathered by people from January whose coins now sit in this bucket right here. It looks like we're in the depths of a bear market and that we've seen most of the worst already. Now, it's very possible that we get some kind of a flush, some kind of a liquidation crush that finally shakes out all the bears. That does sometimes happen. Just here on my screen, we have 2 events like that occurred after capitulations, right? We had a final crash. Now, this one was an external factor, the one in March of 2020, the one that occurred in late 2018. Now, there was a bit of an external factor. I think the NASDAQ also crashed on this day, but we did get a legit capitulation and there was a ton of spending in here. So it's possible that we see another wipeout down to, maybe 30K. I would expect that level to hold. I would expect 25 to 30K to hold. I would be very surprised if we saw prices lower than that for any length of time. But that is feeling like less of a possibility as we move forward, based solely on the amount of support that's building in these areas. But if, God forbid, we do see some kind of a flush out, some kind of an absolute wiping of leverage, which occasionally happens, it could push us down to 30K, which is the support from July. And the next level below that is the realized price, which currently sits around 24,000. Now, the realized price is the price at which every Bitcoin last moved on chain. So in a way, it's the cost basis of the entire network. Now, when I go back in time and show you past markets, the realized price, which is here in pink, has been broken below in bear markets. It's been broken below 4 or 5 times in Bitcoin's history. Now, price does not spend a lot of time below that level, but when it does break below there, it means 2 things, usually. One of them, it does mean that the majority of the network is underwater. It means that most coins last moved at a higher price than the current price. That's what happens when we get below the realized price. So it means that the cost basis of the network is above where we are, and most people are in loss. But that also, because of Bitcoin's asymmetric nature, because its supply is inelastic to demand, and they won't make more of it just because people want to buy it, dips below the realized price are historically very powerful buying opportunities. So in the back of my mind, as an oh shit, I hope this doesn't happen level, I'm keeping the realized price as a possible backstop. But I don't think that that's the most realistic outcome. I think that holding support here seems possible, and it seems very realistic unless the macro situation becomes more uncertain, unless we get more FUD. If the market becomes more scared of rate hikes and we see additional de-risking, Bitcoin will be affected. It could lose this support level and find itself back down in the 30s. That to me seems more realistic than testing the realized price, but I like to point it out to you because I want you to know that we don't just have open air below us down to 0. There's actually several layers of resistance that we could expect to come into play if there was further downside. But for now, this is my expectation. More sideways action. Hopefully we hold this 39,600 level. And if fortune favors us, the major indices will find their way back to key support and not see this as an additional downside move. As a final note, for those who may be curious, we're still watching a high level of open interest in the futures market. There hasn't been a real move in either direction to show us the bias in futures. We know there are shorts present. We know there are longs present. But because OI is so cranked up and price has just been chopping sideways, it has allowed traders to continue compounding their positions without having any of them closed out. So without dramatic price action, traders can get away with just sitting on positions. That's what we're seeing, and it will continue building up until we get a big move. Now, whenever that move comes, the violence of it is in a way directly proportional to how much leverage is in the system. But I don't expect that we would see a dramatic flushing of this leverage unless we were to get above this level here or this level here. 39,600, as we mentioned just a moment ago, or around 52,100, which was the top of the consolidation range. But as long as we continue chopping around in this area here, it's realistic to assume that open interest will just keep working its way higher and higher and higher. I didn't want to spend too much time on futures today because it's pretty much status quo from what we've been talking about and expecting, but I wanted you to see the data for yourself. So that's really what I'm looking at today. Futures hasn't changed much. It's still very torqued, and a quick move will probably bring a violent liquidation to somebody in that market. But what I've been looking at this week and going into the next few days is keeping an eye on the macro headwinds and the Western market's behavior. If they can show a bit of strength, maybe get some temporary relief here rather than moving further down, it would give me confidence that Bitcoin can just continue ranging. I have been accumulating Bitcoin at various points over the last month or so. I see this as a value area for myself, for my personal investing strategy. I am not giving financial advice. I'm not qualified to do that, but my personal strategy has been to buy local lows. So anytime we have gotten near 41,000 and when we dipped below 40K last week, I was buying in those moments. But that's my strategy. I have a very long-term plan. And when I see hodlers on chain stacking coin, I see myself in them. My colleague Checkmate says this, and it's so relatable. If you can find yourself in the data, it can help to give you confidence about the decisions you're making. And I see myself in these hodlers' behaviors. I am growing my stack in price weakness because my time preference is subterranean. I am looking many years into the future. Bitcoin is not a swing trade for me. And that is why the supply dynamics are so fascinating to me to talk about, because it helps me more intimately understand the other people that I'm investing in Bitcoin with. And they are telling us that they have the same amount of confidence that I have right now, and that they see this as a value area. So that's how I'm going to treat it until momentum returns to the market. Make sure you're following me here on Twitter at TXMC Trades. You'll find a lot of my analysis on there and a lot of charts. I try to bring a lot of it to YouTube, but some of it doesn't make it. You'll also find out about podcasts and other content that I'm contributing to. If you have any comments or questions for me, please leave them down below and I'll respond to as many as I can. I hope you're having a great week so far. Hope you're staying bundled up. We just got a cold front where I live and it is chilly outside. So stay comfortable, take care of yourselves, be kind to one another, and we will chat in just a few days, friends. Thank you for watching. Cheers.